Hello and welcome. Today, the Times Now digital network is joined by someone who is a member of the Prime Minister's Economic Advisory Council, as well as Managing Director of Kotak Mahindra Asset Management Company, Nilesh Shah, for an exclusive interaction. Thank you for your time. As someone who is focusing on advising the government on structural reforms, showing them the path towards great economic momentum for India, your thoughts really on how should investors read the PM's repeated appeal urging economic caution. Remember, for the benefit of our viewers, sir, I'm going to read out the seven appeals from the Prime Minister. They state reducing petrol and diesel consumption, avoiding gold purchases for 1 year, reducing the use of cooking oil, reducing dependence on chemical fertilizers, prioritizing work from home, and using fewer foreign branded products, adopting Swadeshi, as well as avoiding foreign travel for 1 year. So, to your mind, how should investors and how should India's citizens really read this appeal?
Well, Indian citizens have two examples ahead of them. During the independence movement, Mahatma Gandhi talked about Swadeshi, requested donation from wealthy Indians for the freedom movement, and people responded. Even today, you will find Gandhian wearing khadi clothes. That Swadeshi movement, that gifting donation of gold, silver by every Indian to the freedom movement resulted in end of colonization and India got independence. A similar thing happened when Prime Minister Modi requested citizens to surrender their gas subsidy in favor of poor people. Again, more than a crore upper middle class, lower middle class, rich Indians surrendered their subsidy. And today, so many rural households are getting cylinders. Their life has become smoke free. These are the two examples which are in front of Indians for emulating. Prime Minister has put a mirror in front of the nation. Undoubtedly, rising oil prices has adverse impact on Indian economy, from inflation to growth to current account deficit. It adversely impacts interest rate, rupee, inflation, equity market, and hence, following this austerity measures, cutting down wasteful expenditure will be a good beginning to tide over current situation.
Right, you say it's a good beginning, but we have seen the Sensex crash nearly 3,500 points in the past four trading sessions. Oil prices have surged already over 40% since the start of the West Asia war. The rupee is at its weakest ever and remains the worst performing Asian currency. Gold and silver prices continue to surge consistently, even as India raises gold and silver import duty to 15% now to curb imports and support the rupee amid the West Asia crisis. So, how do you think investors should read this now, given the impact we have seen, sir?
So, equity markets are looking at what's happening in Middle East, where supply of energy as well as price of energy remains under pressure. 2 days back, President Trump made a comment that Middle East ceasefire is on life support. Undoubtedly, markets are pricing in higher escalation, higher uncertainty, and hence it is correcting. From an investor point of view, undoubtedly this is tough time. Last 2 years, equity market hasn't given much return. In fact, it has given negative return. Gold, silver undoubtedly have done well. This is time to follow your dharma of asset allocation. We have always advised asset allocation to our investors. Diversify across debt, equity, precious metal, real estate, global investment. So keep a diversified portfolio. Keep some dry powder to invest during uncertainty. and be a long-term investor. Undoubtedly, there are many bad newses, but a good price and good news generally don't come together.
Right. So you're saying keep it diversified. You're suggesting a diversified portfolio. What sectors then do you think, in the time being, that investors should eye, given the uncertainty, the sectors that they should be looking at and the sectors that they should be avoiding at the moment then?
Essentially, Sakshi, this is the time to go pure bottom up rather than top down.
Mm-hmm.
If oil price is X and availability is better, there will be one set of beneficiary. If oil prices are higher and availability is lower, there will be another set of beneficiary. Is there a way you or I can make a prediction about oil prices? Answer is no. So what is in our control is to focus on good businesses run by good managers, available at reasonable prices. There are many domestic businesses across banking and financial services, construction, consumer discretionary space,
Mm-hmm.
cement, pharmaceuticals and healthcare, hotels and tourism, where adverse impact of current geopolitical crisis will be lower. If you can find within this space companies which are managed by good managers and there is reasonable valuation, one can look to add. But do remember, this is neither a very cheap market like COVID days, nor a very expensive market. It is somewhere around fair value market. So you can be somewhere around neutral weight to equity. Within that, do favor large and mid cap companies compared to small and micro cap companies.
All right, so that's as far as the sector's outlook is concerned. But for those saying, okay, oil prices is something you're saying we'll have to wait and watch how it goes ahead, how what prices are like in the times to come. But what are your thoughts on many saying that, look, the fuel price hike is inevitable and therefore the timing of the appeal? Your thoughts on that then?
Undoubtedly, if this war was short-lived, government would have probably absorbed the pain or the losses in their balance sheet. But as the war continues to extend, the threshold losses will be higher than government, the losses will be higher than the government's threshold. We need to maintain path of fiscal prudence. We also need to ensure that consumers are not overburdened, and hence sharing of burden between upstream oil producer, corporate India, consumer India, and government India is the best way. If there is a trouble at home, every member of the family contribute to share the trouble. Currently, we are passing the same situation, and hence government, corporate and consumer India and upstream oil company all have to come together to share the burden.
All right. Well, many are saying that why wasn't, these thoughts, why weren't they shared earlier? So questions are raised on the timing of the appeal, of course. But as, Uday Kotak, the founder of Kotak Mahindra Bank, has said that, look, we must prepare for prolonged global uncertainty, and the time has come for India to prepare for a prolonged period of global uncertainty. Do you agree then?
Undoubtedly, when a visionary like Mr. Kotak says something, one needs to truly understand that he's the person who can see the future, who can shape the future. And undoubtedly, right now, we are passing through a phase of uncertainty. Now, in this phase of uncertainty, the proverb, when the tough time comes, tough gets going, should be applicable to us. There are many reforms which we are unable to do when the going is good. We are a democratic country, and hence many a times reforms are possible under pressure. Never let go a crisis. Same way, we should take advantage of current crisis to roll out next level, next generation of reforms which can make Indian industry more competitive.
Mhm. Right. Well, take advantage of the current crisis. Thank you so much, Nilesh Shah, for sharing your thoughts and for joining us for this exclusive interaction as we continue to track the impact on the global economy, oil prices, stock markets, precious metals, even, and the road ahead for India's economy going forward.
Thank you.